TSP to guaranteed income. So specifically, we're going to look at the pros and cons of staying within the TSP, and also compare that against outside options so that you can make a better decision depending on your specific situation. So from retirement planning to maximizing your federal benefits, that is what we as Independence Benefits are here to help you with. And some of the questions that we get commonly and that we help our clients answer are, what is my first calculation? How does that first pension work? And what are my options for spousal coverage and survivor's benefits? I know that's an extremely popular topic here lately. Also, what is the best way to coordinate TSP? How does it work with my pension and Social Security? And how can I maximize what I'm getting from that TSP account? How do I protect the TSP from inflation, sequence of return risks, which we'll cover here in just a second. That's an extremely hot topic, especially this time of year. And then finally, what does my TSP withdrawal options entail? What is my ability to use that money in retirement as a lifetime income? We will cover all that today, but what I first wanted to tell you is the first session of this webinar was at 12 o'clock. We had around 110 attendees on that session, and our appointment slots have been booking up like crazy. So if you have questions, you already know that you're planning ahead and you're looking to start making a plan together for that TSP. I want to urge you, go ahead, do not wait. Text retire to 256-443-9964, and that will put you in the queue to go ahead and schedule your appointment. That way you're skipping the line. You're not having to wait on those slots to open up. My wife, Allie, and I, we run the company. So if you schedule an appointment, you're always going to be meeting with one of us. And we have opened up some additional slots, but I did just want to let you know that those are booking very quickly. So go ahead and schedule that appointment. So, really, the topic of today is the retirement landscape has changed. I think that's something we're all aware of, especially looking at this past year and everything that's gone on, not only in the government with shutdowns, DRPs, and VERAs, but also just in the economy in general. Back in March, due to some of the tariff policies, we saw the markets crash 10%, rebound, and then go up 10%, all in a 2 week span. Now, that doesn't really affect you if you still have 20 years left in your career. You're just continuing to the TSP and allowing it to grow. But if you're near retirement and you're looking at starting to withdraw those retirement savings to supplement your income, well, that can be a real risk for you. So that, in addition to rising healthcare costs, Social Security rules changes, IRMA, and then, like we said, that market volatility and inflation make retirement more expensive and less predictable than it has been in the past 5 years. So federal employees we talk to, they worry about withdrawing from their TSP, especially during those turbulent market conditions. It's never feels good for the market to go down and you start withdrawing from that TSP because you're basically locking in those losses at that point. The TSP is excellent for accumulation. While you're working, it's one of the cheapest and best retirement savings vehicles that exists. It's got some of the lowest fees, it's got a high agency match, and it has really simple, fun choices so that you can make your decisions easily. However, in retirement, it's not about accumulation. Retirement is about protection and longevity. You want that money that you built up in the TSP to last for your entire lifetime. So that's why more federal employees we are seeing create their own guaranteed income streams. And one quote I wanted to share with everybody, this is actually from BlackRock, which is one of the world's largest asset managers. So they recently warned that market turbulence is likely going into 2026 because of investor leverage, speculation, and also sectors like AI going through a huge, what I would consider to be bubble right now. So that suggests that the volatility we saw in 2025, back in March when the market dropped 10%, that volatility may be here to last. So if you're a retiree and you're looking at beginning to withdraw from those savings. This is important to know and it's something to be aware of. So that's why we're seeing guaranteed income strategies become so prevalent and important for retirees today. So, why does this matter? Well, many Americans are now on average spending 20 to 30 years in retirement. So, those retirement savings they maybe only had to last 10 to 15 years. Now, and you can see the CDC quote here on the side, the average life expectancy in the US is 78.4. So federal employees, they're retiring even earlier, with many leaving at the MRA or even earlier due to these VERA offers. So half of retirees are expected to outlive the average age. So that increases, number one, your risk of running out of savings. But number two, it increases the risk of being all invested in the market as you're withdrawing in retirement. So without a plan for steady income and protection, market downturns can really wreak havoc on your retirement income and what you're actually able to withdraw from the TSP every single year. So, what guaranteed income helps solve is it gives you income you cannot outlive. Those payments continue forever, no matter how long you live. Whether you live to the 78.4 average or you live to 95, those payments continue always. It gives you protection from market losses. So if the market goes down, if the market crashes, your income is unaffected. It also gives you predictable, stable income. In my opinion, it's impossible to make a plan and a budget without having guarantees that you can depend on. And finally, it gives you peace of mind knowing that all of your expenses are covered and you don't ever have to wonder about where your next paycheck is going to come from. It's all taken care of and it's all guaranteed. So let's talk about sequence of return risk, because this is one of the most popular topics we are seeing this year, especially in the middle of all this volatility. So if you're planning to use your TSP to supplement your retirement income, you need to pay attention to this slide. If you don't notice anything else from the webinar, this is the most important part. So if we look on the left, we have a chart and you'll see on the second hand column, it shows a return percentage. So that is what the market returned that specific year. You'll see in the beginning on the left hand column, those returns are positive in the beginning, plus 10, plus 9, plus 8, and they go down over time. In the last year, in year 20, it's negative 10. On the right hand side of the column, you'll see the returns start off negative in the beginning. So the difference between these two scenarios, both of these are assuming that someone is withdrawing 4% from their portfolio every single year. The only difference is the sequence of the returns that they earned. So on the left-hand column, this person got their good returns early and their bad returns late. You can see at the end of 20 years, their balance was still $40,514. So they still have quite a bit left. However, you notice the person on the right-hand side of the column that got those bad returns early, at the end of 20 years, taking out the same amount of money, they have negative 17,638 in their balance. Their income ran out in 16 years, and that's supposed to last them for their entire retirement. So that's why it's so important to be aware of these risks, because yes, the rule of 4% can absolutely work, but mathematically, you run the risk of, if those returns are bad in the beginning, you're either going to have to adjust your income or you're going to have to make a different plan altogether and have to actually work on living on less. So again, if you're planning to use your TSP to supplement your income, you must be aware of sequence of return risk. A few bad years at the beginning of your retirement could lower your income or cause you, even worse, to run out of money completely that you saved for retirement. So let's look at a real life example. And this is a client, John, that my wife, Allie, and I helped to protect and give guaranteed income using part of his TSP. So when we met with John, John was getting ready to retire from federal service. He was 60 years old and he had 25 years of service up to that point. Now, when John retired, his high three average was $80,000 per year. And when we calculated it out, we found out that John was going to get about $20,000 per year for his first pension. He was going to get about 18,000 from his Social Security supplement until Social Security started at age 62. So if we add those two together, John has guaranteed retirement income of almost $3,200 per month, just shy of $38,000 per year. So John is making about 47% of what he was making while he was working. And as we're talking with John, he really expressed to us that he needed more than 47%. He couldn't make that work because of his mortgage, his bills, and all those continuous expenses that we all have. So the great news is John had contributed to TSP. He had a balance of 550,000. So we put a plan together for John to help supplement that pension and Social Security income. So let's look and see what that worked out to be. So using 400,000 of that 550,000 that John had in TSP, we put him in a lifetime income account. And that income payment started at $1,958 per month. If you remember, that's larger than his pension payment that he's getting from his 25 years of federal service. The funds were rolled from TSP to that outside IRA, and John also received a bonus protecting his funds, and his funds actually increased until he was ready to start that lifetime income. So that income again is guaranteed for either John's life or John and his spouse's life if that's what he chooses to do. So it's a great way to leave a survivor's benefit for your spouse. It can increase over time. And when he gets an increase in his income, that increase is guaranteed for life. It can never decrease. So John gets to choose his beneficiaries and how that money is distributed when he passes, whether he wants his spouse to take on those guaranteed monthly payments for life, or whether he just wants that to be distributed in a lump sum. It's totally up to John. So this gives him an additional retirement income, and let's see how that complements his pension and Social Security. So real life example, again, we have John. He has the same numbers. They haven't changed since 2 slides ago. He's getting $1,666 a month for his pension. He's getting $1,500 for that Social Security supplement. And that TSP lifetime income account is going to pay him an extra $1,958 per month. So that brings John's total retirement income to $5,124 per month. That's almost $62,000 a year. That gives John about 77% of the income that he was making while he was working as a retiree. So with this setup, it makes John's transition much smoother into retirement. He knows that all of his bills and those mandatory monthly expenses that we all have, they're going to be guaranteed for the rest of his life. And he's not dependent on what the market does for his monthly paycheck. So this also gives him flexibility because if you remember, we only used 400,000 of his TSP. So John still has 150,000 sitting in TSP that he can access at any time. If John wants to go on a vacation, if he needs a lump sum for a house repair or just wants to buy a new car, John has a large lump sum left in TSP he can always access. And he knows that he has 3 monthly payments that he can never outlive. So if you're in the middle of planning your income right now, I just want to urge you, text retire to that 256-443-9964 number. And what we'll do is we will put together your pension estimate. We will put together your Social Security income estimate and show you if you decide to wait to take Social Security versus take it now, what your difference will be. We can also run illustrations for TSP to show you what your options are. How much are you going to be able to leave in TSP? How much are you going to need to use for a guaranteed income? That way, your income is taken care of, and you don't have to worry about the market determining your budget. So, some of the benefits of guaranteed income and what it really gives John and gives the clients that we help with this, when used correctly, it can solve some of the biggest risks that retirees face. And the reason for that is it's guaranteed lifetime income. Again, it does not matter if the market crashes, you're always receiving that monthly payment. It can never change. That's security and that's peace of mind. It also gives you protection from market losses. And ultimately, it gives you a base that you can plan around. And that's what I'm really big on. I'm very conservative. And as a retiree, I think you need to focus on guarantees. You don't need to focus on speculation. The time for speculating was when you were an employee and you had 20 to 25 years left to grow your savings. As a retiree, we want to focus on maximizing what you have, reducing your liabilities, and securing your income. That's the most important thing. And as Warren Buffett said, rational people don't risk what they have and that they need for what they do not have and don't need. When you're a retiree, you have your retirement savings, you have your pension, you have Social Security. We don't risk those for some crazy market returns. We secure those and turn them into guaranteed income. So, how independence benefits is different, it's very simple. Number one, we're a family run firm. So, if you contact us, you're always going to meet with myself or my wife, Allie. And we use what we like to call a client focused approach. Every retiree is different. I have never met with two federal employee retirees that are the exact same in all their scenarios. So if every retiree is different, every income strategy is going to be a little bit different as well. So what we do is we do the hard back end work to evaluate over 60 different guaranteed income products to determine what best fits your goals. And a lot of people say, well, why do you need to compare all these different products? Are they all not the same? Well, no. Each company is going to offer different terms based on your age, your spouse's age, when you're going to start taking income, and many other factors. So we go through and we find the most optimal solution for you so that you can at least have the information to make an informed decision. We know a lot of companies out there we've seen, they only want to focus on selling one product. They have one product, one carrier that they like, and that's all they're ever going to offer you. We shop carriers and products because, quite frankly, we're product agnostic. We don't care if you go with company A, B, or C. We care that you get the highest guaranteed income that suits your specific situation. We're also going to factor in how things like taxes and IRMA will play into your income planning because those are very important factors. Also, if you have Roth conversions as well, we can factor those in. And ultimately, we just want to make sure you, again, have information so you can make a good decision. So, what happens next? So, if you are looking at retiring in the near future, maybe you've already retired and you took one of the DRP or VERA offers, let us go ahead and schedule your guaranteed income analysis. That is going to include everything from your pension, Social Security, TSP, and we can even go through Medicare, IRMA, and all those other questions that you have. We can also help you with your retirement application. So if you're still putting in your paperwork into GRB and ORA, we'd love to help walk you through that, and we've done it for thousands of federal employees. We'll go over your TSP withdrawal options and really just help you put a plan together that you can depend on, that you know you're always going to have guaranteed income from in the future. Now, one thing I want to point out, we do not charge any service or management fees for any of our consultations. So if you meet with us and you just have questions about retirement, we are happy to walk through that with you, and you're never going to get a bill from us. So we always have believed in an education first approach. We're not going to pressure or hassle you to do anything. We will put information in your hands so that you can make a good decision. So, with that, I just want to thank you all for joining. Again, definitely go ahead and schedule that individual review. You can do that using the telephone number right there. You can text or call that number. You can also email me personally at chris@independencebenefits.com, or you can scan the QR code and it will take you directly to the page to book your appointment. Now, one thing I want to go through is my wife Allie has actually sent me over some questions that we had come in. So if you have questions, go to the bottom of your screen. You'll see there's a Q&A section, and drop those questions and we'll try to get it to as many of those as possible. So the first question I see here from Allie is, my TSP is already Roth. Can I set up one of these accounts with Roth funds? And that's a great question. So you can absolutely set up guaranteed income products to work with Roth funds. That's something we would want to evaluate really just from a tax planning perspective to make sure that was the best move. But that's absolutely something you can do. And that's a very good question. So the next question, which we just covered, do you charge fees for setting up these accounts? We never charge fees. So as independence benefits, we do not charge any type of fees. We are paid directly from the carrier if you decide to implement an option, but none of that comes out of your account balance, and that's something you're never going to receive a bill from us for. So we believe in free education and helping people. So will this be recorded and sent out? That's again another great question. So everybody who registered for this webinar session is going to receive an email tomorrow with a link, and it will have basically just this session recorded. So that way, if you want to look back on it, maybe you want to show it to your spouse or you have additional questions, feel free to share that around, and you should get that sometime tomorrow, probably tomorrow afternoon. Finally, how does the annuity affect my spouse? Can they receive the money too? Yes. So those guaranteed income accounts, they can be set up for you to receive the payments as the employee, also for yourself and your spouse. So if you were to pass away, your spouse would continue getting those payments for life. Most spouses, if they're not federal employees, are not going to have a pension. So this can be a great way to basically buy a pension for your spouse, so you know they're always taken care of in case something happens, in case you were to pass away. It's a great question there. And then finally, Roth conversions. What about Roth conversions? Can you help with that? Yes. So TSP has just announced, actually starting in 2026, that Roth conversions are going to be an option. We are actually planning our next webinar to specifically cover the intricacies of Roth conversions. But that is something we can absolutely help with. So if you have any questions about that, definitely let us know. And with that, I do just want to thank you again for joining the session. If you have any questions, let us know and book that one-on-one appointment. My wife, Al, and I would be happy to speak with you. Thank you and have a great, great rest of your day.